Market rallies into the end of the week as earnings season comes in better than expected. Here's what you need to know before the bell. So far, about 64% of the S&P 500 has reported earnings, and about 54% have beat estimates. Well, not surprising since we lowered those estimates so much, as we've talked about before. But that was giving a lift to markets on Thursday and Friday. Nice rally coming right off that 50-day moving average. That support held, ran right back up here to the previous high. So again, market sitting right there at resistance today. That also turned our MACD buy signal back up. Now, it hasn't crossed back into a buy signal just yet. This morning, futures are basically flat here on news that First Republic Bank has failed over the weekend. JP Morgan absorbing that bank and all those assets for depositors. That's keeping the credit stress at a minimum for the markets right now. So markets kind of sitting flat this morning, not a big move on that news over the weekend. But again, markets are sitting here. It's not unusual that with markets rising like they have been over the last month or so because of earnings, that you have this kind of short-term reversal. But given that the signals are very elevated at this point, markets are pushing up towards 2 standard deviations overbought. There's not a lot of upside from here, so I wouldn't panic too much here about the market getting away from you. Again, be a little bit cautious here at the moment. Markets have come a long ways over the course of the last month or so, particularly after that buy signal that we got back on March the 15th. There's been a big advance in the market since then. Now, moving into summer, a few things are going to go on as the economy slows down. The big news this week, of course, the Federal Reserve hiking rates. The big issue for the markets from that story is going to be their outlook. What does the Fed say about future rate hikes? With inflation remaining very sticky, it's hard to expect the Fed to become a lot more dovish, and that suggests that the markets could come under a little bit of pressure because the markets have been hoping for this proverbial pivot, and that pivot idea is starting to get pushed out further into the year, particularly as economic data continues to be a lot stronger than expected, particularly on the employment front. The important thing right now is to remember that markets are still performing bullishly. Not a lot of reason to be negative here. Breadth is narrow and has been driven by just a handful of stocks, but that can last for quite a while longer. So again, don't become overly negative here at this point. Keep a watch on markets. Everything is fine here. Support right there at that 4,000 level. That is key, critical support to continue to watch for this markets that would designate a change to that bullish structure that we've been in over the last month or so. I'm your host, Lance Roberts, and that's what you need to know before the bell.